Welcome to our exciting exploration of Investing for Dummies, 8th edition, by Eric Tyson. We're thrilled to have you here as we dive into the world of investing and uncover valuable insights from this fantastic guide. If you enjoy what you see, don't forget to give us a thumbs up and subscribe for more engaging content. Now let's jump right into the book and discover the secrets to smart investing. In this introduction, we explore the fundamental concepts of investing, as outlined in Chapter 1. Investing is defined as the act of putting your money to work for future use, which is essential for achieving personal and financial goals. The chapter emphasizes the importance of understanding various investment types, including stocks, real estate, and small businesses, while also highlighting the role of lending. Additionally, it warns against common pitfalls in investing and stresses the necessity of acquiring knowledge to navigate the investment landscape effectively. This section delves into the concept of ownership investments, which are crucial for building wealth. It highlights how many wealthy individuals have achieved their fortunes through ownership of stocks, real estate, and small businesses. The chapter discusses the potential for long-term growth in real estate and stock markets, emphasizing the importance of diversification to manage risks effectively. Additionally, it points out that investing in businesses can offer both financial returns and personal fulfillment. Understanding the associated risks is vital for making informed investment decisions in ownership investments. In this chapter, we explore the concept of risk in investing, emphasizing that risk is often subjective and varies from person to person. The chapter outlines different types of risks associated with investments and discusses how individuals can reduce these risks while still aiming for reasonable returns. It also highlights the importance of understanding expected returns and how much one needs from their investments. By recognizing the subjective nature of risk, investors can make more informed decisions and develop strategies to manage their investment risks effectively. This section delves into the evaluation and management of investment risks. It emphasizes that while risks are omnipresent, many individuals fail to recognize or understand them fully, leading to misguided investment choices. Diversification is presented as a key strategy to mitigate risks, along with the importance of a long-term investment perspective. The chapter also discusses the significance of recognizing market cycles and making informed decisions about when to invest. Lastly, it highlights the necessity of continuous education to maintain a competitive edge in both career and investment landscapes. In this chapter, we focus on the essential steps to get your financial house in order. The chapter covers various topics, including the importance of saving for emergencies, managing debt effectively, and setting clear financial goals. It also emphasizes the significance of funding retirement and college accounts while understanding tax implications. Additionally, the chapter explores diversification strategies and the role of insurance in protecting your assets. By addressing these key areas, readers can build a solid foundation for their financial future and make informed investment decisions. This section highlights the critical need for an emergency cash reserve to handle unexpected expenses. It suggests saving at least 3 to 6 months' worth of living expenses in accessible accounts. The risks of not having such a reserve can lead to forced sales of investments at a loss. Additionally, the chapter discusses the importance of evaluating and managing consumer debt, emphasizing that paying off high-interest debts can yield significant returns. It also touches on mortgage debt management, encouraging readers to consider their financial situation and investment opportunities when deciding how quickly to pay off their mortgage. In this introduction, we set the stage for Chapter 4, which delves into the workings of stock and bond markets. The chapter emphasizes the transition of companies from private to public status and the significance of understanding financial markets for better investment decisions. It highlights how companies raise capital through stocks and bonds, explaining the fundamental differences between these two types of securities. Additionally, the concept of initial public offerings (IPOs) is introduced, providing a glimpse into how companies can access public funding. This chapter aims to equip readers with essential knowledge for navigating the financial landscape. This frame discusses the intricate relationship between financial markets and economic factors. It begins by explaining how earnings are crucial for driving stock prices, emphasizing that companies aim to maximize profits. The efficient market hypothesis is introduced, suggesting that market prices reflect all available information. The impact of interest rates on the economy is also highlighted, noting that high rates can slow growth and affect consumer spending. Furthermore, the Federal Reserve's role in setting monetary policy is examined, along with the connection between inflation and interest rates, illustrating how these elements interact to shape the financial landscape. This introduction slide presents the key topics covered in Chapter 5, Building Wealth with Stocks. The chapter emphasizes the importance of understanding stock markets and indexes, which are crucial for making informed investment decisions. It also highlights smart strategies for buying stocks, including the significance of price-earnings ratios. Additionally, the chapter discusses historical market extremes, providing valuable lessons for investors. Common mistakes in stock shopping are addressed, along with actionable steps to improve investment success. Overall, this chapter serves as a comprehensive guide for individuals looking to build wealth through stock investments. This slide delves into the fundamental concepts of stock investing. It begins by explaining that stocks represent ownership in companies, which is essential for understanding how profits are generated. Investors can profit through dividends, which are payments made by companies, and appreciation, which refers to the increase in stock prices. The slide also emphasizes the importance of major stock market indexes, such as the Dow Jones Industrial Average and the S&P 500, in tracking market performance. Furthermore, it introduces the concepts of bull and bear markets, which indicate market trends. Lastly, the significance of price-earnings ratios is discussed, along with strategies for achieving long-term investment success. This introduction provides a brief overview of Chapter 6, which focuses on the essential aspects of investigating and purchasing individual stocks. The chapter emphasizes the importance of thorough research before making investment decisions. It highlights the significance of understanding annual reports and key financial documents like 10Ks and 10Qs. Additionally, it introduces valuable resources such as the Value Line Investment Survey, which can aid investors in making informed choices. Finally, the chapter touches on the practical aspects of placing stock trades, ensuring that readers are well equipped to navigate the stock market. This slide delves into the key research resources and analytical methods discussed in Chapter 6. It emphasizes the Value Line Investment Survey as a crucial tool for investors, providing condensed and reliable stock analysis. Understanding a company's business operations and market share is vital for making informed investment decisions. The slide also highlights the importance of analyst assessments and ratings, which can guide investors in evaluating potential stocks. Furthermore, it discusses the significance of analyzing financial statements, such as balance sheets and income statements, to gain insights into a company's financial health. Lastly, it encourages utilizing independent brokerage research to enhance investment strategies. In this introduction, we explore Chapter 7, which focuses on the world of bonds and other lending investments. The chapter begins by defining lending investments, which involve lending money to organizations in exchange for interest. It contrasts these with ownership investments, which provide partial ownership in assets. The chapter emphasizes the importance of understanding when to consider lending investments, especially for those seeking current income or lower volatility. Additionally, it provides an overview of various lending options, highlighting the need to assess risk and return when making investment decisions. This frame delves into the key considerations when exploring lending investments. It highlights the safety of bank deposits, emphasizing the role of FDIC insurance, which protects depositors up to a certain limit. The rise of online banking is discussed, showcasing how it can offer better interest rates compared to traditional banks. The frame also evaluates CDs, noting their potential penalties for early withdrawal and lower yields compared to bonds. Money market funds are presented as a viable alternative for higher returns. Lastly, the importance of diversification in bond investments is stressed, as it helps mitigate risks associated with individual bonds. This introduction slide provides a brief overview of the chapter titled Mastering Mutual Funds and Exchange-Traded Funds. It highlights the key topics covered, including the reasons for investing in funds, the secrets to successful fund investing, and the various types of funds available. The importance of asset allocation and professional management is also emphasized, setting the stage for a deeper understanding of how to navigate the world of mutual funds and ETFs. This slide discusses the numerous benefits of investing in mutual funds and exchange-traded funds, ETFs. It highlights the professional management provided by experienced fund managers, which is crucial for making informed investment decisions. Cost efficiency is another significant advantage, as funds can spread research expenses across many investors. Diversification is emphasized as a way to reduce risk, while reasonable investment minimums make funds accessible to a broader audience. The slide also touches on the high financial safety of funds compared to individual stocks, and the convenience they offer to investors. In this introduction, we set the stage for Chapter 9, which focuses on the essential topic of choosing a brokerage firm. The chapter outlines the various types of brokerage services available, emphasizing the importance of understanding the differences between discount and full-service brokers. It also highlights the growing trend of online brokers and the benefits they offer. By summarizing the key points, we aim to provide a clear understanding of what to look for when selecting a brokerage firm that aligns with your investment needs. This frame delves into the advantages of using discount brokers, which have become increasingly popular since the deregulation of commission rates in 1975. Discount brokers typically charge significantly lower fees, allowing investors to save money on trades. Their lower overhead costs contribute to these savings, as they often do not maintain expensive office spaces. Additionally, many discount brokers operate on a salary basis, which helps mitigate potential conflicts of interest. It's essential for investors to assess their specific needs when choosing a discount broker, as the right fit can lead to better investment outcomes. In this section, we explore the world of online brokers, which have gained popularity due to their low trading commissions and the convenience they offer. The use of technology allows these firms to operate more efficiently, passing savings on to their clients. However, it's crucial to be aware of the potential pitfalls, such as impulsive trading behaviors and hidden fees that can diminish the benefits of low commissions. Service quality is another important factor to consider, as not all online brokers provide the same level of support. Researching and comparing options is vital to finding the best online broker for your investment strategy. This introduction highlights the key topics covered in Chapter 10, Investing in a Home. The chapter emphasizes the importance of making informed decisions about home ownership, including whether to rent or buy, and how to fit these decisions into your overall financial plans. It also discusses the significance of understanding your budget and the long-term benefits of owning a home. Additionally, the chapter addresses the pros and cons of renting versus buying, providing a comprehensive overview for potential homeowners. This foundational knowledge is essential for anyone considering investing in real estate. This frame delves into the financial considerations of home ownership, as discussed in Chapter 10. It highlights how owning a home can provide financial security in retirement, as well as serve as a source of equity for funding education or starting a business. The chapter emphasizes the importance of understanding the total costs associated with home ownership, including mortgage payments, property taxes, and maintenance. Additionally, it discusses the tax benefits that come with home ownership and the long-term impact of inflation on renting versus owning. Finally, it encourages readers to evaluate market conditions to determine the best time to buy a home. In this chapter, we explore the multifaceted world of real estate investing. The chapter begins by discussing the attractions and drawbacks of investing in real estate, emphasizing the potential for wealth generation alongside the inherent risks. It highlights the importance of understanding what it takes to be a successful property investor, including the need for patience and a long-term focus. The chapter also introduces simple and profitable methods for investing in real estate, such as rental properties and real estate investment trusts, REITs. Additionally, it covers hands-on investment opportunities and common pitfalls to avoid, ensuring that readers are well equipped to navigate the real estate market. This section delves into key concepts that underpin successful real estate investing. It begins with the idea that the limited supply of desirable land creates a consistent demand, which can drive property values up. The concept of leverage is introduced, explaining how investors can control larger assets with a smaller initial investment. The chapter also discusses income generation through rental properties and the potential for appreciation over time. Furthermore, it emphasizes the importance of conducting thorough market research to make informed decisions. Lastly, it warns against inferior investment opportunities, such as timeshares and high-priced seminars, which can lead to financial losses. In this introduction, we highlight the key topics covered in Chapter 12, which focuses on real estate financing and deal-making strategies. The chapter emphasizes the importance of selecting the right financing options, finding a reliable real estate agent, and negotiating effectively. It also touches on the significance of understanding mortgages and credit scores, which are crucial for securing favorable loan terms. Additionally, the chapter provides practical tips for making informed selling decisions, ensuring that readers are well equipped to navigate the complexities of real estate transactions. This frame delves into the essential aspects of financing real estate investments. It underscores the necessity of obtaining a mortgage, especially for those who are not affluent. The chapter provides valuable strategies for improving the chances of loan approval, such as being transparent with lenders about potential credit issues. It also discusses down payment requirements and the option of private mortgage insurance for those who cannot meet the standard down payment. Furthermore, the importance of maintaining a good credit score is highlighted, along with insights into adjustable rate mortgages, which can be beneficial or risky depending on the borrower's financial situation. In this chapter, we delve into the essential aspects of assessing one's readiness for small business ownership. The chapter emphasizes the importance of understanding the traits that contribute to entrepreneurial success, such as persistence, independence, and the ability to handle challenges. It also highlights the various alternatives to starting a business, which can be more suitable for some individuals. Additionally, the chapter discusses the significance of having a well-structured business plan and the potential challenges that entrepreneurs may face, ensuring that readers are well informed before embarking on their entrepreneurial journey. This section of the chapter focuses on the critical considerations that aspiring entrepreneurs must take into account. It stresses the need for self-assessment to identify personal traits that align with successful entrepreneurship. Financial sacrifices and lifestyle changes are highlighted as necessary steps in the early stages of business ownership. The chapter also emphasizes the importance of understanding market needs and competition, which are vital for success. Furthermore, it discusses the necessity of a well-structured business plan to guide the entrepreneur and the emotional challenges that may arise, ensuring that readers are prepared for the realities of running a business. This introduction slide presents the key topics covered in Chapter 14, which focuses on the essential steps for starting and running a small business. The chapter emphasizes the importance of preparation, financial planning, and customer engagement. It also discusses the decision to incorporate and the significance of managing finances effectively. Each bullet point highlights a critical area that aspiring entrepreneurs should consider as they embark on their business journey. Understanding these elements can help set a solid foundation for success in the competitive world of small business. This slide outlines the key considerations for starting a business as discussed in Chapter 14. It emphasizes the need for thorough market research to validate business ideas and the importance of making a decisive choice to start. Financial and emotional preparation is crucial, as many aspiring entrepreneurs struggle with leaving their jobs. Reducing personal expenses can help ease the transition into entrepreneurship. Additionally, exploring part-time work while launching a business can provide financial stability. Lastly, personal savings play a vital role in supporting the initial stages of a new venture. This slide focuses on financing and managing a business effectively. Bootstrapping is highlighted as a viable option for starting with minimal capital, encouraging resourcefulness. Entrepreneurs should explore various funding options, including loans and support from family and friends. The implications of incorporating a business are discussed, emphasizing the need for liability protection and tax considerations. Keeping personal and business finances separate is crucial for clarity and compliance. Lastly, maintaining accurate records is essential for tax purposes and overall financial health, ensuring that entrepreneurs stay organized and prepared for audits. This introduction slide presents the key topics covered in Chapter 15, which focuses on purchasing a small business. The chapter outlines the advantages and disadvantages of buying an existing business, the necessary skills and experience required, and the importance of selecting the right business. It also discusses the evaluation of franchises and multi-level marketing companies, as well as the negotiation process for a successful purchase. Understanding these elements is crucial for anyone considering entering the world of small business ownership through acquisition. This slide highlights the key advantages and drawbacks of purchasing a small business. On one hand, buying an existing business allows you to avoid the challenges of starting from scratch, reduces risk, and can make it easier to secure funding. Additionally, it opens doors to industries that may only be accessible through acquisition. However, buyers must also be aware of the potential baggage, such as existing employee issues or a tarnished reputation. Understanding these factors is essential for making an informed decision when considering a business purchase. In this chapter, we delve into the complexities of selecting the right investing resources amidst a sea of information. The chapter highlights the challenges investors face today, including the overwhelming amount of advice available from various sources. It emphasizes the importance of evaluating these resources critically to make informed decisions. The chapter also discusses how advertising can compromise the quality of investment advice, urging readers to be discerning about the information they consume. By understanding these dynamics, investors can better navigate the landscape of financial advice and make choices that align with their goals. This section provides practical strategies for evaluating investment resources effectively. It encourages readers to investigate the revenue models of sources, as those relying on subscriber fees may offer more reliable content. Understanding the author's philosophy helps in discerning the quality of advice. Additionally, examining the qualifications of information providers is crucial to ensure credibility. The chapter warns against blindly following financial gurus and emphasizes the importance of focusing on constructive information rather than the noise prevalent in financial media. Ultimately, it advocates for self-education as a means to empower investors in their decision-making process. In this introduction, we explore the key themes of Chapter 17, which focuses on the various traditional media sources available to investors. The chapter emphasizes the importance of sifting through financial publications, radio, and television programs to find reliable information. It also highlights the risks associated with investment newsletters and the need to recognize hype and inaccuracies in published articles. By understanding these elements, investors can make more informed decisions and navigate the overwhelming amount of information available in the media. This chapter serves as a guide to help readers discern quality content from misleading advice. This section delves deeper into the evaluation of financial publications and media. It encourages readers to explore bookstores and newsstands for both investing and general interest publications that feature investing columns. The chapter stresses the significance of reputable editors who prioritize quality information. While engaging with high-quality journalism can be enjoyable, the chapter warns against the pitfalls of mind-numbing content filled with hype and inaccuracies. By learning to identify trustworthy sources, investors can better navigate the media landscape. Additionally, it hints at the transition to online resources, which will be covered in Chapter 19, broadening the scope of information available to readers. In this introduction, we explore Chapter 17, which focuses on the various traditional media sources available to investors, including periodicals, radio, and television. The chapter emphasizes the importance of discerning quality information amidst the overwhelming amount of financial advice available. It highlights common pitfalls in investment journalism, such as media hype and the influence of unqualified experts. The chapter also provides strategies for effective media consumption, encouraging readers to critically evaluate the credibility of the information they encounter. This sets the stage for a deeper understanding of how to navigate the financial media landscape. This frame delves into the intricacies of navigating financial publications. It underscores the significance of choosing high-quality sources that provide accurate and reliable information. The chapter discusses the prevalence of hype and misinformation, particularly during market downturns, and how this can mislead investors. It also addresses the role of expert quotes in journalism, cautioning readers to discern qualified experts from those lacking credibility. Furthermore, the dangers of investment newsletters are highlighted, emphasizing the need for skepticism regarding their claims. Ultimately, the chapter encourages readers to adopt strategies for informed decision-making in their investment journeys. In this chapter, the author emphasizes the importance of being discerning when selecting investment books. With countless titles available, many of which may prioritize sales over education, readers must be cautious. The chapter warns against infomercial-style books that often mislead readers with exaggerated claims. It also highlights the potential conflicts of interest authors may have, particularly if they promote expensive products or services. The author encourages readers to critically evaluate performance claims and offers a curated list of credible investment books that provide genuine insights in education, rather than mere sales pitches. This section delves into the critical need for skepticism regarding investment literature, particularly concerning claims of high returns. The author discusses notable examples, such as the Beardstown Ladies and Matt Sito, whose claims were later found to be unsubstantiated. The chapter stresses that without independent audits, such claims should be viewed with suspicion. It serves as a reminder that the stock market's average returns are around 9 to 10%, making any significantly higher claims suspect. The author concludes by recommending several quality investment books that focus on education and sound investment principles, ensuring readers can make informed decisions. In this introduction, we explore Chapter 19, which focuses on the essential aspects of investigating internet and software resources for investing. The chapter emphasizes the importance of choosing the right investing software and recognizing potential pitfalls and opportunities online. It highlights the need for user-friendly software that can assist in making sound investment decisions. Additionally, the chapter discusses the evaluation of investment tracking software and the limitations of relying solely on online advice. Understanding these elements is crucial for investors looking to navigate the digital landscape effectively. This frame delves into the evaluation of investment software and online resources. It outlines the benefits of using investment tracking software, such as improved organization and easy access to vital data. However, it also addresses the drawbacks, including the time commitment required for data entry. The importance of verifying online information is emphasized, as not all advice found online is reliable. The chapter concludes with recommendations for reputable investment websites that can provide valuable insights and data for investors. This balanced approach helps investors make informed decisions in a complex digital environment. In this introduction, we set the stage for Chapter 20, which focuses on the 10 common obstacles investors face. The chapter emphasizes the importance of navigating these road bumps and committing to better investing habits. It defines success in personal investing as achieving financial and personal goals with a reasonable investment plan. The chapter also highlights the significance of understanding financial fundamentals to overcome these challenges. By recognizing these obstacles, investors can better position themselves for success in their financial journeys. This frame discusses several common obstacles that investors encounter. First, it warns against blindly trusting authority figures, as appearances can be deceiving. Next, it highlights the danger of getting swept up in market euphoria, leading to poor investment decisions. Overconfidence can also be detrimental, as it may result in significant losses. The chapter advises against giving up during downturns, emphasizing the importance of a long-term perspective. Additionally, it addresses the psychological challenge of accepting losses and the pitfalls of over-monitoring investments, which can lead to impulsive decisions. Understanding these obstacles is crucial for successful investing. In this introduction, we explore the key themes of Chapter 21, which emphasizes the importance of weighing various factors before deciding to sell investments. The chapter begins by highlighting the necessity of evaluating your investment goals and the broader context of your financial situation. It stresses the importance of conducting an annual review of your portfolio to ensure it aligns with your current life circumstances. Additionally, the chapter discusses the time commitment involved in managing investments and how it can affect your choices. Understanding these elements is crucial for making informed decisions about your investments. This frame delves into the critical considerations when contemplating the sale of investments. It emphasizes the need to evaluate the underlying merits of an investment rather than succumbing to emotional impulses, especially during market downturns. The chapter also highlights the importance of understanding tax implications, particularly when selling outside of tax-sheltered accounts. It discusses strategies for selecting which shares to sell to minimize tax liabilities and the significance of capital gains taxes on appreciated assets. Additionally, the chapter advises on the importance of finding a reliable financial advisor to guide you through these decisions, ensuring that your investment strategy aligns with your financial goals. In this introduction, we explore Chapter 22, which provides 10 essential tips for investing during down markets. The chapter emphasizes the importance of maintaining composure when faced with market declines and highlights strategies to protect and grow investments. It discusses the significance of diversification to mitigate risks and encourages investors to view market downturns as potential buying opportunities. The chapter also stresses the need for a long-term perspective in investing, reminding readers that market fluctuations are a natural part of the financial landscape. By following these tips, investors can navigate challenging times more effectively. This frame delves into key strategies for managing investments during down markets. It emphasizes the importance of avoiding panic selling, as emotional reactions can lead to poor decision-making. A diversified portfolio is crucial, as it helps to cushion against losses in specific sectors. The chapter encourages investors to view significant market declines as opportunities to purchase stocks at lower prices. Additionally, it highlights the need to identify any weaknesses in one's portfolio, such as overexposure to a single industry. By tuning out negative media and focusing on long-term strategies, investors can better navigate the ups and downs of the market.